And if uranium equities have been knocked down along with the broader stocks, take advantage of it because the outlook, the fundamentals have never been better.
Today, we have a very special guest with us. I don't think he needs an introduction. CEO of Uranium Royalty Corp, Vice President of Uranium Energy, President of Uranium Producers of America, having worked 35 years in senior positions in the largest uranium companies around the world. Scott Melbye, thanks for coming to the show. How are you today?
Thank you, Luis. I'm fantastic, and it's always a pleasure to be on your program with your network.
Great. We have talked several times recently, but last time you appeared on the show to talk was on March 20th, more or less 6 months ago. So very well timed to speak again with you and update the market. So the first thing I wanted to ask you is if you can describe some of the highlights that have happened during these 6 months on the nuclear and uranium sector that you think are relevant to the audience, to the industry, and we take it from there.
Well, sure, Luis. And, it's interesting is the market fundamentals that I'm going to describe today are so positive for nuclear and uranium as a commodity. And it really comes against a backdrop of where things are, not everything's positive in the world today, whether it comes from the geopolitical threats of Russia and Europe or high inflation and volatile equity markets. It's really against that backdrop that I'm really excited to update the uranium market and what's been happening in nuclear. And it comes down to the fact that nuclear energy, and something we've known, now going close to 40 years being involved in the nuclear energy industry, we always knew what nuclear energy had to provide in terms of carbon-free energy, reliable, affordable baseload energy. But it really has always struggled to gain that recognition more broadly, both politically in the investment world and in the general public. But now you have these mega trends all kind of colliding, and they're finding nuclear energy at the center of them all. If you look at the green energy transition, obviously it has not gone very smoothly. We're finding out that being green isn't all that easy, especially if we kind of pursue energy policies that are based more on ideology and less on math and science. And so we're seeing the energy crisis in Europe. We're seeing various states in the US that have an over-reliance on renewables, facing energy shortages and blackouts. Mm-hmm. But we're also finding out that energy independence is also an element of national security. And so the whole conflict, this appalling invasion of Ukraine by Russia, has pointed out that it's very important to not outsource critical minerals, our energy needs to countries that might not share our interests or our values, and especially countries that might use energy as a weapon. And so it's not surprising that we're seeing nuclear energy being favored by both the political left and the political right. In the United States, we have both the Republican and Democratic Party agreeing on nuclear energy in a way that I haven't seen in my 40-year career. And that's really something, because I think when you take away that political gridlock and ideological opposition to nuclear energy, we may be surprised at how fast and how big nuclear energy can grow worldwide. And we're seeing it with countries abandoning phase-out plans, extending the life licenses, lifetime of existing reactors. And we're seeing a full embrace of small modular and advanced reactors in the United States, in Europe, and elsewhere. And so all that's happening against just the fundamentals of our commodity, uranium, where if you looked at the supply and demand narrative that we see for this commodity, it's probably more positive than it's ever been. Demand is increasing now at, I think nuclear energy grew at a 4% rate. Last year, it's expected to grow at similar levels in the coming years, maybe higher. Mm-hmm. But we're producing uranium at a rate of about 130 million pounds is global production today. But we're consuming now over 200 million pounds. So this deficit of 70 million pounds is causing us to draw on secondary supplies and inventories much more aggressively than was sort of the anticipated, bleed in or gradual drawdown of secondary supplies. So what's happened is we're now finding ourselves at a point where the market is rebalanced. And I say that past tense. We're now at a point where inventories aren't driving the fundamentals of the uranium market anymore. We need new mine production, and we need a lot of it. We probably need 8 to 10 additional new mines globally in the second half of this decade, but very few, if any, have been incentivized. And even some of the big growth countries like Kazakhstan, there's very real concerns of one, whether that uranium can make it to Western markets because of transportation and logistical problems vis-a-vis Russia. And even whether Russia, we look at the needs of China and Russia and not having logistical problems getting uranium from Kazakhstan, we maybe need to look at, a world where less of that uranium makes it to the West and more of it goes to those very specific neighboring markets of Kazakhstan. So again, I'm not surprised uranium prices are back over $50 a pound. And I think we're really in the early stages of this bull market and really see uranium prices increasing significantly beyond where we are now. And that will get into an incentive level that will cause new mine production to come online, but it won't be quick and it won't be easy. And I know you want to talk about inflation and the impact on, on the uranium market, but that's very real. The threshold that we thought new mine production could come on a year or 2 years ago may be very different level today, given the 8, 9, 10% inflation rates that we're seeing presently.
Wow, thank you for that update. A lot of things to take home. As you described, a lot of things has happened. All of them very positive for the sector. And look, the fundamentals are in place. Everything is in place for a bull market. The only question is when. And I'm sure we could talk for hours about each specific topic that you are mentioned. Some of them I want to cover more in detail in this conversation because some of them are very, very important on them. But what I wanted to ask that you have touched a little bit is the energy security, right? It's a very important concept. If you look at nuclear or oil, anything that is related with energy, every president or every council in each specific country are saying energy security is a fundamental pillar for the energy in the country. And last time you were here, there were very relevant news about President Biden saying to cut imports from Russia, such as oil, gas, coal. And coincidence enough, last week was Putin saying that if the West try to ban their imports, Russia will cut everything. He said, and I quote, no gas, no oil, no coal, no nothing. So my question to you, Scott, and I know you know more than 99.9% of the population, for sure, in this aspect. What's your take in that outcome? And what is the most probable outcome to happen, according to you? And what implication may it have? For example...
absolutely. So the access of Russian and former Soviet country uranium into the West can really be cut off or be stopped in a number of different ways. And I was a little surprised that the US banned the imports of coal, oil, and gas very early in the invasion of Ukraine, but chose not to ban uranium. Why is that? I think it exposes how vulnerable US utilities are to Russian uranium. They get about 25% of their uranium enrichment services from Russia, but a full 60% of the natural uranium comes from Kazakhstan, Uzbekistan, and Russia. So the dirty little secret here is that utilities have really been lobbying against a ban, even though they may find Russia's actions appalling and shouldn't be rewarded with $1 billion plus worth of fuel sales each year. It's been slow to come to a ban. You have Senator Manchin on the Democratic side in the Senate sees a gradual banning of Russian imports as the way to go. Senator Barrasso on the Republican side believes it should be more immediate and we should move away more quickly. But another development has really surfaced, and it's exactly what you mentioned, is Putin's becoming increasingly more aggressive in cutting off supplies coming the other way. And that's where we have to think about an embargo coming from Russia to Europe, to the United States. And that's what the US government is most concerned about right now. If they're willing to cut off gas supplies to Germany, they're certainly going to have no problem cutting off uranium supplies to the United States. So we saw about a week and a half ago, the Biden administration request emergency appropriations, $1.5 billion to help kickstart our domestic nuclear fuel cycle in the US to be able to better address a cutoff of those Russian supplies. Now that's going to involve uranium conversion and enrichment components of the fuel cycle all being revitalized in the US. And so we think it's positive. It's a little bit, we're a little bit playing catch up here because this news, Putin could react tomorrow. And then we're scrambling and we're trying to make fuel available to the existing reactors, not to mention new reactors that we're looking to build, the small modular advanced reactors that use high assay, low enriched uranium, which currently is coming from Russia. We need to really move away from that reliance altogether. Now, the third way that these imports can stop is just voluntarily. And increasingly, utilities see it as a reputational issue. They may be reluctant to cut off supplies under existing contracts, but they're certainly not signing new contracts with the Russians. And that's where they're looking to more reliable, stable jurisdictions. I think the biggest beneficiaries here are uranium producers in Canada and the United States, where we're not under the influence of Russia or China, and have significant resources, operations that can grow significantly to replace any supplies we were getting from Russia.
Okay.
So it's it's a very challenging time for utilities to meet their needs with the threat of Russian imports being cut off. But it's also a very optimistic time as the industry looks to really ramp up and replace. And when I say replace, I mean not just American supplies, but I think the nuclear fuel cycle in Western Europe, in Canada, in the United States, and Australia really has to step up here. And we weren't reliant on Russian supplies in the past. Mm-hmm. We kind of fell into that trap over the last 10, 15, 20 years, but we can move away from it as well. And I think the sooner we do that, the better. We don't have to suffer from this move. We've got abundant resources, over £1 billion of known and likely resources in the United States that really haven't been tapped to the degree that they should, but they certainly can. And I know Uranium Energy Corp has big plans to be producing from both of its platforms in Texas and Wyoming. And there are other producers as well in North America that can step up to meet that urgent need.
Yeah, because what you mentioned, at the end, utilities are the buyers of uranium. So what I wanted to ask you is, what are the conversations, and we are going to take some minutes to talk about Uranium Energy Corp for that production, but what are the conversations in that front for the utilities? Because I read today a quote from a very respectful guy, CEO in the industry. He said, and I quote, "Absolutely not talking to utilities. When they want to be serious, we can talk." What do you think he mentioned by that? And what are the conversations, if you can walk us a little bit for the buyers of the uranium? Because well, and you can take it as well for how the companies or UEC or as you are the uranium producers, president of Uranium Producers of America, the US government will be another buyer as well. So you can take us a little bit about
Sure.
those aspects.
Well, on the latter point, we did finally see, and I think this has happened since we had our last conversation in March. We finally have the strategic uranium reserve finally up and running. Bids were requested of domestic miners in August, and so those offers are under evaluation by the Department of Energy. So that's positive. It's small in the first year, and we've got to continue to push to have that a continuing program and at greater volumes. And we believe that as part of this whole revitalization, we can ensure that we're not just looking at conversion enrichment, but uranium as well. With the utilities, I will say the utilities are stepping up, and they are very concerned, and they are taking a much more strategic view at where they get their uranium supplies. I think it's easy when uranium markets are oversupplied, there's abundant spot market supplies. It's easy to take chances on more riskier suppliers or not look at things as strategically. But when things tighten up, as they have in the past, these things cycle back and forth. Utilities are stepping up, they are signing contracts, and for a number of producers, this is giving them what they need to move forward with their operations. With UEC, we kind of have a different approach as an unhedged producer. It doesn't mean we won't sign contracts with utilities. We're very eager to do so, but I think they're going to be much more on market-related terms. We just got through a 10-year bear market in uranium. I'm not going to be so quick to rush out and sign contracts at terms which are more reflective of the last 10 years than they are of the next 10 years. So, we're very encouraged that the utilities are stepping up, and they are desiring more stable, reliable uranium from jurisdictions that are pro-mining, pro-business friendly, are secure, and not under the influence of China and Russia. So that cycle is beginning. We're seeing a lot more contracting now, but it's still very early stages.
True. And you said something very interesting. Utilities are looking for the price that has been the last 10 years in the bear market, not looking into the future. You are looking to prove the next week.
And I don't want to criticize producers that are rushing out and signing contracts or who have signed contracts in the last, say, 2 or 3 years. But I would be a little concerned in an inflationary period where we see 8, 9, 10% inflation. I think they have to be careful not to lock in pricing that 2, 3, 4 years down the road they may regret being too quick to contract and locking in at those levels. So again, only time will tell whose approach is right. But the other thing is we very much want to have our operations up, running, and reliable, and be able to be a counterparty to utilities with proven operations, we can talk about steps we're taking there. So we're very encouraged where the market's going, where contracting is heading, and the need for new production. I mean, that's the real. I think we're in a condition where we will see a supply squeeze very quickly here because the new mines can't come on quickly enough to meet the increasing demand, and that will really put pressure on prices. And I think we're only at $50 a pound. We're only at the beginning of this cycle as we sit today.
I have to ask you, Scott, where do you think uranium prices are heading, and when do you think are going to start reflecting that?
Yeah, well, it's hard to say. I mean, it's hard to say in a world where people in the UK are facing $10,000, gas bill, 10,000 pound gas bills, and I think we have to look at the uranium price in a different lens now. In copper, gold, silver, base and precious metals, we've seen the capex blowups of companies like Freeport, Alcoa, Rio Tinto on new mine production, and so our industry is going to go through that as well. So I think it favors miners that have the permitting advantage, where they have mines that are already permitted, licensed. They don't have to go through that 6, 7, 8 year process. and infrastructure advantage. There are producers like UEC that have existing mine infrastructure that can be restarted. We're not impervious to the impacts of inflation, but we don't have to build a new $1.5 billion underground conventional mine to get into production. We have just incremental ISR well fields and satellites that can get us into production much quicker and at a much lower capital lift. So, is $50 sustainable in the uranium market? Not, absolutely not. I think the best mines in the world probably need at least $60 or higher. And most mines, especially if they have a big capital lift ahead of them, probably need much more than that. So again, uranium at 80, 90, $100 a pound is not out of the question. I also get the follow-up question whenever I say that is, well, won't that kill nuclear energy? Won't it kill the economics of the electricity from nuclear power? No, not really. Uranium is only 5–10% of the cost of generation. And I realize utilities do everything they can to minimize that cost, just like they work to minimize all their cost inputs. But nuclear power is very different than natural gas. Gas-fired electricity, 75% of the generating cost is the fuel itself. So, where we at with gas prices, doubling, tripling, quadrupling, it really prices that electricity out of the market. Nuclear doesn't have that. It's one of the advantages of nuclear power is that its fuel costs are an advantage to that source of energy.
Absolutely true what you said about the percentage of the uranium component for utilities and why it can go much higher than gas prices without affecting the final consumer. That's a very, very important factor. And last question I wanted to ask before jumping into the companies that you are involved with, because it matters what this statement is. The European Union approved in the taxonomy nuclear as environmentally ESG, with it going to start on January 1st of 2023. So what implications do you think it may have for the uranium equities and the whole sector in the investment world?
Yeah, I think it has a profound impact because, we've always been ESG friendly. We've always been carbon free. It's just the EU didn't recognize that.
Yeah.
And that really now will open the door to, billions of dollars of capital that can flow into, the small modular and advanced reactor companies, the uranium mining companies, the conversion, enrichment. All these companies now can fulfill a rightful place in the portfolios of ESG investors. And I think there's a lot of appetite, because if you think about all those ESG dollars have been chasing the same wind power and solar companies, and how many more shares, Vestas or Solar City can ESG funds buy? And by opening up an entire new industry that can provide a very significant portion of global electricity going forward, it really opens up a whole new world of ESG investing. And we're excited, on the Uranium Energy Corp side. We think ISR mining is probably the most environmentally friendly way of mining anything in the world today. Our footprint is quite small. Our energy consumption is quite low. So we've fully embraced the ESG movement, and we're producing our first full report by the end of this year that will really kind of use that as a competitive advantage that we have as in situ recovery uranium producers. Not only is our mining environmentally friendly, the product that we produce is carbon free and contributes to the overall goals. So it's definitely a very positive movement.
True facts. And look, I truly believe that we are going to experience, you said a supply squeeze. I think it's going to be a price squeeze. And I believe the uranium companies, there are very few of them and very few that are really, really good in terms of company and shareholder friendly. And I want to talk about the two companies that you are involved with. The people that follow me already know them a lot. I'm a big shareholder of both of them. And if you want, we can start talking a little bit about Uranium Energy Corp. Last time you were here, you gave us an introduction, so people already know the company. So if you want to walk us a little bit about the catalyst that you've been doing this year, two big acquisitions that you made, advancing production decision. Can you walk us about the catalyst that the company presents for shareholders?
Yeah, well, quite simply, we're the fastest growing uranium mining company in the world today, and really become a significant company with focused assets in North America. We're not in Kazakhstan or Central Africa or other places. We believe the US and Canada is the right place to be. So in December of last year, we doubled our productive capacity, our resources in the ground, and our permitted well fields and operations with the acquisition of Uranium One, with a $112 million investment. It really catapulted us into another level where we now have operational production platforms in two of the best states in the US for mine development and resource businesses, and that's Texas and Wyoming. So not only do we have the hub and spoke in South Texas, where we're developing Burke Hollow to bring that into production and get up to our 2 million pound per year capacity in Texas. We're also looking to expand that capacity at the processing plant, which is fully built, operational, again, pre-inflationary dollars that we benefit from that infrastructure. But now we also have the Irigaray processing plant, our hub, in the hub and spoke operations that we have in Wyoming, with 7 permitted and licensed satellites within 100 miles of the processing plant. Our challenge now is moving both of these into production. And while we haven't made a firm announcement of restarting those operations, we're practically taking all the steps necessary to restart operations. So in Texas, that meant completing the monitor well ring of the first production well field at Burke Hollow. And in Wyoming, it means turning to our immediate ISR well fields at Christensen Ranch that can be literally turned on. And I mean that we can start injecting sodium bicarbonate oxygen into the well fields very quickly and start producing U3O8. What we're more interested in, though, is not being the first one to produce a pound from a new operation. And I think there's a lot of producers out there that's their only focus. We want to be able to sustain production. And so the first pounds are easy to produce. But then once we start producing from those well fields, we need to make sure that we have the people and infrastructure and equipment in place to sustain and grow that production. So as we speak in Wyoming, I just returned from our planning meetings there. We're looking at hiring key people. We're looking at production drilling, ordering plant and equipment. Some of it may be on sort of long lead times with the supply chain issues. I think we're confident enough to place orders for some of this plant and equipment to make sure that we have it on time when we need it. So I know I'm being a little clever here, and I'm not giving you a restart announcement at both of those platforms, but I can tell you we're taking all the steps necessary to move them forward. We didn't just stop with the Uranium One acquisition. We have acquired UEX, which has some of the best projects in the Athabasca Basin and Nunavut. And what's nice is we're working with joint venture partners that are some of the industry leaders in terms of Denison, Orano, Cameco. It doesn't require a lot of our attention, operational attention, taking off of our US assets, but we have a very significant pipeline of future developments in Saskatchewan. So, to be able to say your focus is Texas, Wyoming, and Saskatchewan in North America, it doesn't get any better than that. So that doubled our resources again with that acquisition. And we're very, very excited about that. I think we continue to see ourselves growing, being not a junior American uranium mining company, but being a global mid to large cap uranium leader in the sector. And so that's our total focus. And it's been a lot of really great milestones over over the course of the last year. And not to mention as well, we've been very astute in buying physical uranium inventories. So UEC has accumulated a 5 million pound portfolio of existing uranium inventories and future deliveries at a average cost of below $40 a pound, which is a very attractive asset on our balance sheet. It can be used to sell into utility contracts down the line. It can be, we can monetize uranium inventories as we need development capital. But with over $187 million in cash, equity holdings, and physical uranium, it's safe to say that our mine development can be fully financed from our own balance sheet. That's an incredible position to be in, and that includes both Texas and Wyoming. So again, we feel like we've made a lot of the right decisions throughout the bear market and have really positioned ourselves to be a leader as we go into this next cycle.
Thank you for that update. That's why I'm a shareholder. Great minds behind the company, very clever moves that it's been taking place since the creation of the company, long bear market, taking good steps in that bear market to acquire companies for 10 cents of the dollar. Mm-hmm. Don't need for that capex that it's going to cost a lot of things that you've mentioned in the gold and silver and copper market. So great to hear those news as a shareholder. Keep it up because it's looking really, really good for these next years that are coming in the uranium price. So, and next, I want to take, let's say, call it, you said UEC as mid to large cap producer that it may become. I want to talk, I don't know if to call it as the baby of Uranium Energy Corp, the uranium royalty model, and you are pursuing acquiring physical uranium holdings as well. Mm-hmm. What's the vision behind Uranium Royalty Corp?
Yeah, so Uranium Royalty Corp is a young company, as you know, Luis. We launched on the TSX just around 3 years ago, listed on the NASDAQ about a year and a half ago. And so it is a very young company, taking a very tried and true business model, which is the royalty and streaming business model that Franco-Nevada, Wheaton Precious Metals, these great companies in base and precious metals have built up an entire industry around royalty and streaming. So we, moved to be the first one in our uranium space. And, we're very proud of the early portfolio that we've put together. Some of the best mines in the world with Cigar Lake, MacArthur River. We've got Langer Heinrich in Namibia, and U.S. ISR interests like Lance, Reno Creek. A number of these, even in the last 6 months, have moved closer to returning to production or ramping back up their production. And so we're quite pleased with that. But it is a growth platform. So our focus and all of my activities around URC today are focused on new royalty and streaming assets that we can either acquire in the secondary market, if you will, existing royalties and streams that have a place in our portfolio, or establishing new financings with miners and developers through royalties and streams. And we're quite busy. I mean, we've had about 7 or 8 files on the go, smaller deals, larger deals, existing royalties, and new royalties. So, the catalysts will be, as we complete transactions, the company, hopefully sees a re-rating with each one of these very accretive acquisitions. And quite frankly, UEC is a company that wants to, have at least 2 of the mines that are going to fit this need for new mine production in the second half of this decade. Well, Uranium Royalty wants to be investing in any of the mines globally, whether it's in Africa, Australia, Canada, or the US, that can be part of that new mine development that's needed in the coming years. And so we think the timing's perfect. We did engage in a significant amount of physical purchasing through the Yellowcake investment, through our physical uranium purchases. But I think that's really reflective of where we were in the uranium cycle. uranium was undervalued. We could buy uranium for below the global cost of production and put it in the inventory. That's a good move. But we also knew that uranium industry needed to have mines shut in. We needed to slow down new mine development over the last 10 years because we had an oversupply situation. But that's changing now. So I think going forward, our focus and our main focus is going to be in royalties and streams. But we're quite pleased with the physical uranium investments we've made. Like UEC, those physical uranium investments can be turned to cash to fund additional royalty investments, and they will down the road. But we're always going to be very careful stewards of that, to not sell that uranium in a way that is negative to price formation in the spot market or the medium-term market. So again, exciting model. I think it's the right model in the right industry, in the right commodity at the right time. So we're very, very busy. And I think now that travel has opened up again, we're able to get out and visit various operations in all the global uranium producing districts of the world and see where we can invest on behalf of our investors in growing our portfolio.
That's great. That's great. And well, I think we should talk one video exclusively about the uranium royalty core model, because there are people that are missing, and I think it's the right model. It's a perfect model to take advantage without the inflation aspect, to play in the uranium sector as let's call as a hedge fund in the uranium world. So I will put the links in the description for people if they want to know more about those companies to invest. I always say, do your own diligence before investing, but I believe are the right companies in the right sector right now. So with all of that, Scott, it has been a real pleasure to have you on today. Thank you a lot for your time.
Yeah, Luis, it's my pleasure. And I think you're in these turbulent times in the investing world, uranium and uranium investments really are something that can kind of move against this general weakness that we've seen. And if uranium equities have been knocked down along with the broader stocks, take advantage of it, because the outlook, the fundamentals have never been better.